On today's Hashi, I'm discussing the FOMC meeting, what Jerome Powell said about housing, and new construction insights just released. Today is Thursday, May 8th, 2025. I'm Byron Lazine, and the Hashi starts now. All right, live from my Connecticut office and studio. Let me know in the chat which market you are tuning in from, wherever you may be on this Jerome Powell day. We've been waiting and anticipating all week here as we close out the hot sheet this week for Jerome Powell's presser, which took place yesterday afternoon after the FOMC meeting and ultimate decision. Met for 2 days as they normally do. Jerome Powell came out for the presser and made the statement that they're not doing anything. It was a unanimous decision from the FOMC. That is a signal that they're all on the same page. Not always the case, has been typical, but not always. But they stood firm on the federal funds rate, holding at 4.25% to 4.5%. That's as expected going into the day. CME Group had been bouncing in the high 90 percentile that would be the case for weeks. And obviously going into yesterday, it was up to 99% that the Fed would not make any changes. So what were the big moments in the prepared statement? And then we're going to move forward and go to that presser and we've pulled out and extracted any mentions of housing services. We'll break that all down here in just a minute. But in that prepared statement, obviously, Jerome Powell, reiterated the committee is seeking to achieve maximum employment and get inflation at a rate of 2% over the longer run. What was interesting, though, was some of the commentary around there is a risk of high job loss and there's a risk of higher inflation. Use the word uncertainty a lot. We'll get to that. That certainly has become everybody's favorite word in relation to the economy and what's going on there. So this uncertainty, the tariffs, whatever that nobody can figure out, is leading to now a new risk for Jerome Powell and the Fed that inflation might continue to move up or start moving back up, I guess would be a better way of saying that, and that jobs are now a concern. Two things that they're watching for. That being said, they believe they have the ability to wait, okay? They don't have to hurry and make any decisions, okay? They made that clear that they think they're in a good spot. They're not going to just react to unknowns, but they have also at their power the ability to move quickly if they need to. There's a Nick Timmeros question in relation to that we'll get to when we jump to that. So there's no preemptive rate cuts. Powell emphasized that they will not cut preemptively when they started cutting rates. They kind of mentioned, hey, we're gonna be making these cuts. Not doing that. There's ongoing inflation concerns for the committee. They're going to make data-driven decisions. Sounds very business-like of Jerome Powell. They said the Fed will wait for more data to determine the appropriate response. So no indication that when they meet in the next meeting in 45 days, that there will be a cut. There'll be a lot of stuff that comes out in the next 45 days. Are there going to be trade deals? We've got one to talk about, it seems like now. Just at the same day, coming after, Jerome Powell's presser, all of a sudden this morning, there's an announcement on a trade deal. So are there going to be a whole, kind of run on trade deals here over the next 45 days that maybe changes the landscape and creates less uncertainty? That all obviously remains to be seen. The focus here for the Fed, though, is going to be labor market conditions. There's a concern that the labor market is going to soften and that there is going to be job loss ahead. Every time there is those concerns, though, you kind of see, the labor market kind of spits them back out. It's been very strong. We'll see what happens. Wage growth is down. So that's, even if there's, we're talking about inflation going up, inflation pressures and expectations, that's going to be something the Fed's watching. How high can inflation go if wage growth is down? And then financial and international developments, obviously all the uncertainty around what's going on with trade deals and tariffs. So the other word that was mentioned here before we go to the press conference and kind of break down any of the correlations to housing, one word that was mentioned by Jerome Powell is that there is a concern of stagflation, which was, haven't really heard him talk about that too much. And to me, I was a little surprised that it means that it's something that they're thinking about. Stagflation is obviously a stagnant economy. You could argue that we're in a pretty stagnant economy. GDP went down, 0.3% in quarter one, as opposed to having growth. So that's basically flat. If you take government hiring out of last year, we were flat all year last year. So how long has the economy really been stagnant? Definitely this past quarter, but you could argue multiple quarters if you take government spending out of the equation, something we've talked about a lot here. And then in stagflation, you would have higher unemployment, higher levels of unemployment, and higher inflation while having a stagnant economy. So you need those three, parts of those three ingredients to make up stagflation. And right now you don't have higher unemployment. You have a risk to it or some fears that it could happen. It's one of the things Jerome Powell talked about. And inflation is trending down, not up. It's funny. The President Trump said that there is no inflation. That's his take. He was calling for rate cuts yesterday. He says in a tweet, oil prices are down, interest rates are down. The slow-moving Fed should cut rates. Food prices are down. There is no inflation. And so it goes on to talk about trade deals and all that kind of stuff in that tweet. But the administration's position, according to the president anyways, is that there is no inflation. Obviously, we're up over the Fed's target, of 2%. We're in the, mid to higher twos on inflation. There are signs, though, that the big, movers on inflation, housing services, rental, rents are moving down, and some of that data is lagging, needs time to catch up. But, I don't see a scenario. We talked about it yesterday with some of the permits going down. I don't see a lot of scenarios where rents, take back off and start to accelerate. In fact, in a lot of these areas where they've built up, as we talked about yesterday, a lot of this multifamily, you're seeing more and more price pressure on rent. So that's a good thing for inflation. The tariff, the toll on goods, tariffs, is what's creating some uncertainty on where inflation is obviously going to go. But stagflation did come up, so I thought it was worth mentioning there. And on all of the trade stuff, they're in a wait and see mode. They want more data. They, like the markets, like a lot of people, just don't have any idea what's going to happen until some more of that shakes out. Okay, so before we go to the comments, punchline: squarely focused on achieving the mandate of maximum employment and stable prices, lowering inflation for the American people. So says that the economy still is in a solid position. Unemployment remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal. So those are the highlight levels, but there are concerns that the inflation and the jobs could turn the other direction. If jobs do turn the other direction, job market's been pretty strong, but if they do turn the other direction, that will be the cue, as we've said, for Powell to start cutting rates. If it happens in the next 45 days, the rate cuts will come sooner than later. If the job market does not turn over, it's going to be a kind of a little bit more of a tug and war there between the Fed and the administration. All right, let's go into some of the commentary in the press conference. This is what the market tends to look at the most. We didn't see much movement, really didn't see any movement on the 10-year yesterday. So comments didn't really move the needle one direction or the other. But inside of his opening statement, then we'll go to the Q&A. Actually, inside of his opening statement, he did have one mention of housing. Let's take a listen, and then we'll go to Nick Timiraos from the Wall Street Journal and get his question and answer from Jerome Powell. But let's just go to Nick T. The first one, there's not much there in the first one. Go ahead, go to Nick T, Haley, and we'll get Nick Timiraos from the Wall Street Journal here, his question.
Chair Powell, there's naturally a lot of around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it.
Good readings.
That part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now, it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean?
We'll go to the follow-up here in a second that Nick T has for Jay Powell, but a couple of things there. We've had good readings on housing services if you take real-time data. Jerome Powell said decent readings because they look at old data. So I always have an issue with the data that they're looking at. You look at real-time data, it would suggest that, inflation is actually moving down more than what our current numbers would suggest, because particularly talking about the CPI, because housing makes up such a large percent, and we know real-time data is better than the data inside of the CPI. That's one point that we've been on for a while here. The second point is, the economy is resilient and doing fairly well. Obviously, there's some holes you can poke there. GDP was down 0.3% in quarter one. So not growing, doing fairly well. What is it? That's really kind of just pointing towards jobs. And we'll see, obviously, on jobs with the fear that there could be, turning a corner that Jerome Powell mentioned. But right now, still very strong. The cost of waiting to see further are fairly low. Well, when they waited too long to raise interest rates, that came at great cost with inflation. That came at significant cost, and the Fed did wait too long. It is the argument right now going on between the administration through headlines, and the Fed that they're waiting too long. And so there's more than just the administration in the camp of, hey, you're waiting too long to cut these rates, and they waited too long to increase them in the beginning. So, but the Fed's position is they don't see a risk in waiting and collecting more data. And then obviously goes into, we're just going to have to wait and see on what happens with the negotiations on tariff. We have a little bit of news here on one of those negotiations. They want to continue to learn and see. Let's see what the follow-up from Nick T, where that goes here with Jerome Powell.
When you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is.
Okay. So everyone is waiting to see how developments play out. The cost of that is that people push off big time decisions. Businesses push off big time moves, investments, hires. Families can push off big time decisions like home purchases. We're seeing that at at significant levels in the real estate industry, where you're just not getting as many transactions because there is a hold off, wait and see. You get into stagflation, which is something that he did mention yesterday, not as something to be overly concerned about, but as a possibility. If again, you already have a stagnant economy, and if you had job loss, unemployment rise, and you had inflation rise, you'd be in stagflation. You had it in the 70s, and during that time, you did see a lot of pauses. Typically, you would see a lot of pauses on big decisions. Now, you also have very high interest rates, obviously, there. If you get, I think this time, if you get job loss, you're going to get rates coming down, not moving up. But, that's the belief of what the Fed's going to do. But obviously, that remains to be seen. All right, about 20 minutes into the presser, we had one more real kind of mention of housing. There wasn't a lot in this one on housing. It was a lot of tariff talk, but we did get a question from Howard Schneider over at Reuters, and we'll go to that one now.
The economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues, nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also, there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that. But in the meantime, yes, we're watching it extremely carefully, like everyone is, but don't see really much evidence of it in the actual economic data yet. And by the way, consumers keep spending, credit card spending. It's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Yeah, I guess to the point there, sentiment can change. It can change if you get, some belief that the economy is going to be better in the future. That the sentiment can change quicker than hard data. And when they talk about soft data, it's like they don't. And this is one of the things in defense of Jerome Powell here. They just don't have enough information to show that we certainly are in a downturn. More deals like I guess this one here could change that sentiment. So this morning, Trump says, or late last night, rather, Trump says the U.S. has struck a comprehensive deal with the UK. And so they're due to hold a press conference this morning in the Oval Office. And they say they've got an agreement that they're going to be announcing with the United Kingdom. It's full, it's comprehensive. Britain, they run a trade deficit with the U.S. They were spared the higher reciprocal. So, this one is kind of maybe low-hanging fruit. Get the ball rolling. They were, spared the higher reciprocal tariff previously, and they were hit with the 10% one. And so, to me, this might be low hanging fruit. I mean, UK, okay, right? I mean, I think when we think about the big trading partners, we're thinking about, obviously China's probably going to be last, okay, but we're thinking about, what's a deal with India going to look like? What's a deal with Canada? What's a deal with Mexico? Those are the deals. UK, great, okay, but there'll be there's going to be a press conference. I think, is it this morning or is it later today? Yeah, it's going to be this morning. So it's actually going to be in just a little bit. So that press conference is going to be happening 3 p.m. London time, 10 a.m. here. So as we're finishing up, they'll do that press conference. But, we'll see. Does this create, they're talking about more deals behind the scenes. Does this create a flow of deals? And does that change that sentiment that Jerome Powell is talking about? So no move from the Fed, not a lot on housing, not a lot of certainty, really just more uncertainty. So we'll let the next 45 days, I guess, play out and see where it goes from there. We'll see if the Fed truly did wait too long again, this time to start cutting rates once again. All right, there's some new construction insights I want to go over. Obviously big purchases are kind of on pause mode for some. And you're at a spot right now as we sit here in May of 2025 where there's a high point in inventory on new construction, close to under 9 months, but in the high 8s of months of inventory on new construction. That pressure, that inventory pressure that new construction builders are feeling is putting pressure on their prices, their ability to get a higher price on their sales. Okay. The builders are also delivering a smaller and more affordable home in some metros to try to meet where buyers are at right now. But the builders are now saying, hey, some of the tariffs, the uncertainty is going to threaten progress. Okay. So newly built homes are becoming more affordable. The median list price, according to Realtor.com, is $448,000. It's down 0.3% year over year. It really become more affordable, more so not by design, but by economic pressures. Okay. The inventory pressures, supply and demand pressures, the premium on new construction, it's reached its lowest level of any first quarter since 2020. So the premium on new construction versus existing home sales, that gap is getting small. And 26 of the largest 100 metros, both new construction prices and square footage are down year over year. And these are places where the builders are delivering a smaller and property and lower cost inventory. Okay, so here's a few charts. They're going to be useful if you're in a new construction market for sure. If you just want to understand the dynamics of what's going on here on the macro with new homes versus existing homes. And even though there's some rate differences here that are fascinating. So if you want to jump into that, obviously BAMX members just jump into the hot sheet classroom on School, and it's where we upload all of the all of the slides for you each and every single day under today's hot sheet. So new construction here, the prices are falling while existing homes continue to rise. So new construction list price, again, just under the 450, and you're seeing a steady climb on existing. There is on list price $50,000 gap. That sale price is shrink. It's almost even. Existing home sales and new construction almost even at this point. But right now you're seeing a decline on new build prices, the listing price, so not the sale price, and still an increase today, generally speaking, on existing home sales. Okay, if we move over to new construction premium and the share of listings. Okay, so the premium on new construction, versus an existing is up over 10%, but it was up over 25% quarter 3 of 2021. Now it's trending, below 15 and trending down towards 10%. It actually hit only 10% at a point last year. And then the share of listings is rising. The share of total listings for new construction is up close to 20%. 2020, that was only 15%. So the new construction premium and the new construction share of listings Both of those numbers are moving in opposing directions there. New construction premium and share of listings. We just took a look at that one. Next one I wanted to show you, again, available inside of your school for BAMX members, would be this one, the listing count index to 2020. So existing home sales, the listing count versus 2020 is moving down, while new construction certainly moving up to 30%. Look at that number in 21. That was, negative 15%, now plus 30, a total reversal there on what's happening with the listing count and the inventory in new construction. And then this one's fascinating. This is where, builders do have an advantage over that existing home market right now, is if you're got a buyer that's pulling a mortgage rate, last year on average, new construction was 6.1% on the 30-year fixed versus 6.6% on existing homes. So 6.1 versus 6.6, that's a significant, a half a point. When we see half a point swings, we see activity move up. And right now, builders have that advantage still today. Something Ivy Zellman, we covered earlier in the week, talked about, like, do more of that instead of cutting prices. And that should be the recommendation. And it's working for, obviously, the builders in that respect. All right, 10-year here with where we're at here today, 4.297 on the 10-year. So not a big change. You had Jerome Powell, you got this UK announcement, this trade deal, and we're kind of just hanging out where we've been all week. We're right at about 4.3. We're just under 4.3. 30-year fixed mortgage here today, yesterday rather, closed out at 6.86. So a tick down on the 30-year fixed mortgage. Probably not a big moving day today on the 30-year fixed. And, we'll see where it goes. That's your hot sheet here for this week. The simple way to support all the content we put out here on the YouTube channel at BAM is to just hit subscribe and hit the notification bell so you see these shows come out each and every Monday through Thursday when the markets are open, 9:30 on the East, 6:30 in the West. You know the deal in between. Have a great rest of the week. New Knowledge Brokers pod up tomorrow. I think there's a new walkthrough today, right?
Mm-hmm.
New walkthrough today. So some upcoming pods for you. Have a great rest of your day. We'll see you next time. Until then, toodaloo.